We are recording. Okay. Hello and happy Monday, everybody. My name is Joelle Anthony. As you all know, I'm also known as the Grave Woman, and I am so excited because today we are talking about death and taxes, and I have a special guest, tax accountant, Miss Erica Booth. How are you doing today, Erica?
I'm doing well, thank you. Happy Monday.
Yes, happy Monday. So let's go ahead and jump right in. Could you please let me know where you're from and exactly what it is that a tax accountant does?
So I'm originally from Baltimore, Maryland. I went to school in Philadelphia, graduated from Temple University, and had a interest in accounting as my major
Mm-hmm.
because I just love working with numbers. I wasn't quite sure what I was going to do in the accounting realm. I just knew I liked numbers.
Okay.
Eventually, over the course of Temple's undergrad career and going into full-time work as an accountant, I realized I enjoyed taxes. I
Okay.
enjoyed taking the class at Temple in corporate taxation, and I enjoyed working in the department at DuPont where I first started my career. And I just found that so many people didn't have a clue about taxes and would ask questions. They automatically assumed because I was an accountant that I did taxes, and that's not the truth for a lot of accountants. A lot of accountants have different specializations, and
Okay.
taxes is an area that many can go into. But I just enjoyed answering questions, and eventually I took it a step further and decided to start my own business and wanted to help folks on a lower level, I would say, because at a corporate level, you're just working with businesses within that corporation. So everything is high level, but I wanted to be able to assist individuals and small businesses when it came to tax questions and tax preparation services.
Okay. So, Erica, what exactly are taxes?
So taxes, of course, is what you have to pay to the IRS, the federal government, state, any local municipalities like the city or the county. And they're going to taxes are a calculation of what you owe to that specific authority based off of your earnings. Uh, Unless you are a not tax exempt, but like a 1099 or a subcontractor or independent contractor, is that's when you're responsible for paying your own taxes. They're not coming out of a paycheck. But
Okay.
taxes are what you owe to earn a living here in the country in U.S.
Okay. So, when I think of taxes, I think about like the beginning of the year when I get my W-2s from my job and it tells me how much money I make, and I get to take it to H&R Block or go on taxturbo.com and do my taxes, right? But what happens concerning taxes when somebody dies?
So when someone passes away and if they have assets um, to their name, they have to someone is responsible to put their assets into an estate, and you pay taxes on those assets at the date of death. So that person could be a guardian of the estate. That person could be a trustee of the estate, but they're responsible to make sure that the appropriate tax filings are completed. Um, and they're responsible to make sure any future tax filings are completed in case assets increase year over year. So it's like even in death, you're still being taxed to a degree.
Wow. So who can legally handle the deceased tax affairs?
It could be anyone related to the deceased, like a child, a spouse, a niece, a nephew. If they have a will that they created before death that says XYZ would be responsible for my financials after death, then that
Mhm.
person would proceed to get an estate created in that deceased name so that they can handle the assets and the taxes and everything after the fact.
Now, I know this seems kind of silly, but if the deceased receive a return on their taxes, like, you know, you or I might receive a tax return, what happens to that return and who does it go to?
It could go back into the estate.
Okay.
Yeah, it could definitely go back into the estate, especially if the estate is going to be opened year after year. I'll give an example. So if the deceased have rental property and they have renters in there, that income has to be reported on the estate return.
Okay.
Or they could designate that that money in another way. That refund could go to a charity. It depends on what's in that will and where they instruct the money to go. But yeah, that's basically where it would go. It would end up.
Okay.
It could
Yeah,
possibly end up.
my grandfather, when he passed away in South Carolina, I believe he had 17 properties, and it was like a headache for my grandma, because she's like, I didn't want these properties in the first place, and now I'm responsible for these properties. And I didn't really understand what she was saying, because at the time I was like 22 when my grandfather passed away, and it's like, she really has to pay taxes on all of these properties every year, and they're not going down. And I know sometimes, is there a way to set up your taxes or your estate ahead of time so that it doesn't receive as many tax penalties?
Well, it depends, because like in the situation of your grandfather, unless they were to have sold those properties before death, like if you sell the assets and get rid of it, yes, that can eliminate or reduce taxes.
Okay.
Because everything is based off of assets.
Okay.
Of course, you'll have liabilities, debt, different things of that nature that could still be in the deceased's name, and that kind of helps bring down the value of the assets, well, the net assets when filing. But if you have a lot of assets in there, you're going to have greater chances of higher taxable liabilities. But the less assets you have, the less taxes you'll have to worry about, because you can't tax on what you don't have.
Okay. So let's say that a homeless person, passes away, and they don't own anything and they don't have a next of kin. Is someone still responsible, like the state or the county, for filing taxes on that person for that year?
No, because homeless, I don't know if they would have had any earned income.
Okay.
So there probably would be no taxes to file on an individual level. And if they have no assets, there's nothing to, file on an estate level.
Okay. So how are taxes handled on inheritances and businesses upon the death of the owner?
So if you are in charge of filing an inheritance tax return, just closing everything out, and it's not going into, a continued estate return, then the tax rate is based off of who is filing that inheritance return. So if it's a child or a spouse, they get the lower end of a tax rate. If it's like a niece or a nephew or maybe a grandchild, then the tax rate gets a little bit higher. So it's like a lineal type of a rate. So the closer you are to the deceased, the less of a tax liability you'll have to pay. Am I making sense?
That makes a lot of sense, that I did not know that.
Yeah. So I have clients that'll come in that they are the child of the deceased. So they get a very low, like maybe 0.045 is the rate for the child on it. The spouse might be just about the same or a little less, but it might go up a few points for like a grandchild or a niece or nephew. So it depends on who's doing it, but it's still a very, very, very low tax rate. I mean, they're not going to take hundreds and thousands of dollars from you, but you just never know who's going to do and how much they have in assets that they have to claim at the date of death. So that's a big key. how much in assets does that deceased have at the date of death.
So let's say that a person passes away today and nobody files their tax returns for 10 years. Is there like a statute of limitations or how long you have to file the return?
Yeah, it's a statute of limitations.
Okay.
Yeah.
What is that time?
Is.
What is that statute?
So it is 3 years.
3 years, okay.
Yeah, it's 3 years. The IRS could still keep that open though, if they choose. They could possibly file a return on behalf of the deceased. But I believe there are ways to, determine that person is deceased, so that there aren't, that their account could be closed.
Mm-hmm.
But yeah, if you wait some years, 7 years as well, I think even 7 years, that's it. Like they close it. There's nothing they can do.
Wow. Okay, so does that, okay, I guess I'll ask this question first. How is income from life insurance proceeds taxed? And what advice do you have for beneficiaries?
It's not taxed. So
Okay.
life insurance proceeds to a beneficiary is non-taxable. If those funds accrued any interest because of it was invested or something, then that interest has to be reported as income on the return. But the actual proceeds itself, like the original amount, would not be taxed unless, of course, interest is accrued on it. Then that interest is considered interest income and has to be reported. But in that case, if there are beneficiaries that receive large proceeds, that's their money. Mm-hmm. So that's nothing that has to go into an estate or trust or anything like that. Unless that's something, minus the estate, if it has to go into a trust, unless it's written that it's a child or a minor, and then they write that in the case of death, the proceeds will go into a trust for that minor and they could take it out at a certain time. Mm-hmm. That money really just goes to the individual who is the beneficiary. And for those folks, I always say, if you come into a lot of money, such as insurance proceeds, find your way to a financial advisor to learn the best way to invest those proceeds.
Definitely. Okay, so our last question is, what happens if the deceased tax affairs are not properly handled?
You're looking at, possible late payment penalties and fees and interest and all, similar to, just your normal 1040 for individuals. You want to try to get on top of that. They even provide discounts for inheritance tax returns. Here in the state of PA, they provide a discount if you could get the return filed within a certain amount of days. I don't want to confirm that it's 90 days, but that's what I'm aware of. But okay. It could be a little longer time. But the sooner you get it done, the better, so that you have it, taken care of and wrapped up, because it's a lot trying to get all of those affairs handled, at a sad time nonetheless, but exactly. Especially when you weren't prepared for it. So when you're not prepared for it, the best thing to do is to get a tax attorney and or an accountant that can assist you in how to close everything out.
Okay. Well, Erica, I don't see that we have anyone else on the line. So why don't you tell everyone who will see this where they can find you and get in contact with you?
Sure. So I would love everyone who, may have questions about taxes or just inquiries about how we could be of help. You can visit us at ericaboothtaxes.com. And follow us on Facebook, Erica Booth Tax and Accounting Services. On Instagram, Erica Booth Tax. We provide daily information to everyone in preparation of tax season, the new changes in the tax law. We like to keep everyone up to date, so you can't say, hey, I didn't know or I didn't hear about this. You can always reach us by email at info@ericaboothtaxes.com. and we'll be happy to talk with you. We're still offering free consultations until the end of the year, 2018.
Okay.
So if anyone wants to, sign up, schedule a call or an office meeting, we're available to help.
Okay. I did think of one more question, Erica, and it pertains to business and taxes. Is this process the same if the business owner, if the deceased is a business owner for their business as it is for the individual?
That's different.
Okay.
That's definitely different. So there's probably some agreements and XYZ that should be written up. Will everything when it comes to a business owner, especially if they're in a partnership, that type of stuff has to be, I want to say prearranged before anything takes place. It's great to have that type of information. So it's different. It's different because then that business has to either close or has someone that could run it, or just different things, because a person could pass away that's a business owner, but they may have someone in place to run it in the case that happens,
Right.
So it's a little different with businesses.
Right. Okay. Well, Erica, I thank you so much for your time, and you are always welcome here at the Grave Woman. I'm pretty sure that once this posts online, that there will be questions from people who didn't get the chance to call or chime in today. So I will be tagging you in every question that I get. And thank you so much for your time today. I really appreciate it. And it's been a pleasure speaking with you.
Oh, you're very welcome, and thank you for the opportunity.
All right. I'll talk to you later. Take care.
Thank you. You too. Bye-bye.